So in this video, I'm going to tell you the truth about mortgage interest and show you how to pay off your mortgage early. And with this knowledge, you'll save a ton of money by reducing the amount of interest that you pay, and you'll end up finish paying your mortgage years ahead of schedule. Because if you know how money works, then you have a better shot at building wealth. Now let's get into it. So most people don't realize that mortgage interest is heavily front-loaded, which means that the majority of your payments are going towards paying the interest and not paying down the actual loans, especially in the first several years of your mortgage. So on a $500,000 loan, 6% rate on a 30-year, $2,400 in the first several years is going towards paying interest, whereas you can see a very small amount of that payment is going towards paying down the loan. And the difference for this is you can see here, 90% of your first year is going towards paying interest. Year 5, 82% of your payment is going towards paying interest. Years 10, 73% is going towards paying interest. And year 15, about 60% of your payment is still going towards paying interest. And here's the difference between a 15-year versus 30-year loan. So on a $450,000 house, on a 15-year loan, the principal and interest payment is going to be around $3,700 a month. Now, at the end of the loan, you'll pay about $200K of paying interest, versus if you were to do a 30-year, you're going to have a lot less payments, about $2,700 a month, but the interest is almost double. You pay about $500K in paying interest on a $450K loan. Now, this is a true comparison with the same interest rate, but normally 15 years offer a little bit lower interest rate, and you're able to pay off the loan a lot faster because the payment is higher, so the loan balance drops a lot quicker. But most people can't afford to do a 15-year mortgage, and that's why 30-year mortgages are a lot more popular, because the payment is stretched for 30 years. But again, it's still not the end of the world, because you can turn a 30-year mortgage into a 15-year with these tips. So if you set up bi-weekly payments, this is essentially you're just making half payments every 2 weeks. And so at the end of the year, it gives you 13 full payments instead of 12. And over time, this will save you almost paying $85,000 and paying interest over the life of the loan, and you'll pay off your loan about 5 years faster by doing this simple trick. So let's say you do quarterly payments. This is going to be the most impactful, and this is just making an extra payment once every 3 months and applying it straight towards the principal balance. This will save you almost $300,000 in paying interest over the life of the loan, and you'll pay off your mortgage 10 to 12 years faster. Now, let's say you apply an extra $100 a month, apply it towards principal. That equates to about $3.33 per day. And this will save you almost $45,000 in paying interest over the life of the loan, and you're going to pay off the loan about 2.5 years quicker. Now, let's say you apply an extra $300 a month, apply it towards the principal amount. That's about $10 a day. This will save you about $120,000 in paying interest, and you'll pay off the loan about 5 to 6 years faster. Here's the easiest and most simple way to pay off your mortgage. So you're going to take your mortgage payment. This includes taxes and home insurance, and you're going to divide that by 12, and you're going to apply it towards the principal amount, the entire payment. And if your payment is $3,200 a month and you divide that by 12, then that's going to give you about $266 per month and apply it towards principal. And this will save you over $110,000 in paying interest, and you're going to pay off the loan 5 to 6 years faster. And if you would like my help in buying or refinancing, click on the link in the description, schedule a call, and I'll be in touch.